From one user losing his rent money trading options, to another user 10xing his net worth in an hour, we're gonna go over the scariest Wall Street Bets trades of silver season. Haroon is a user who didn't start his trading journey with very much money, but ended it off with even less. His first post was made on December 6th of 2025, and things were already off to a not so great start. He didn't tell us what he lost money on in the title of the post, but we do see he was bullish on Netflix, so maybe that had something to do with it. He made another post 3 days later asking everyone if they thought it would be a good idea for him to YOLO what he had left on Oracle's earnings report that was gonna come out tomorrow. He also says that he's down 6.5k in total, which is 2 years of his savings. So things looked pretty bad for him overall. No worries though, cause he took everyone's sage advice and bought Oracle calls that were pretty far out of the money. Oracle did not beat earnings. Profane Divinity said, "Lol, only 1k though, you're at least using sensible sizing." But little did he know that was all Haroon had left. Even though he just got completely wrecked, he still wanted to keep his trading journey going, so he scooped up 1 DTE SPY calls 2 weeks later. He only dropped a modest $65, but this was all he had at the time. SPY jumped up about 1% a day later and hit his strike price, so he sold for a 350% gain. And 2 days later, he made it all the way back up to $2,200. He was still down $7,800 over the past 3 months, but he said that the only chart that matters is the daily chart. He continued his comeback journey, and 4 days later, he lost another $1,600. Devastating, to be honest. And it seems like he was getting real desperate at this point, because he said, "I promise if I make this back, I'll donate 1k to this subreddit, maybe like $20, $50 gift cards." At least you get a gift in 7 hours. After that, he took a month-long break from posting and reflected long and hard about his trade so far. Finally, it was January 22nd, and he knew that the only thing that could save him at this point was, of course, Meta's earnings report that was coming out 6 days later. He threw $1,500 into calls that were about 5% out of the money, and things actually felt different this time. A few days into holding, Meta was up 9% and his calls were up $1,200. The only thing was that earnings were coming out later that day after the market closed, and he wanted to know if he should hold into earnings or just sell and run away with the profits while he could. Ping Geek said, "Statistically, earnings don't end well." But guess what? They did. Meta jumped over 10% the next day, way past Haroon's strike price, and he sold for a $5,200 gain. He was starting to make all his money back, which meant he was about to give out $1,000 in gift cards, as long as he didn't somehow manage to destroy his account again. Well, on Thursday, January 29th, he posted a screenshot of his $7,200 worth of gold calls he bought during the dip. Bitcoin for the bank said, "About to be 30 to 50k by next week." Version 2 said, "I'd say wait for Asia to pump this overnight / over the weekend." Well, Asia did not pump this overnight or over the weekend. Unless gold makes a miraculous recovery by February 20th, Haroon is done for. Also, if you're gonna inverse anyone on Wall Street Bets, you should probably inverse version 2. Flexidonis21 is a user who likes buying options with his rent money. His first post was made back in May of 2024, where he didn't have much in his portfolio, but he did have an $1,800 gain, which means he made a withdrawal. He posted to the debt-free subreddit about clearing some of his debt, which is great news, but it's at least semi-concerning that his next post was a 6-leg parlay on FanDuel. Going back to Robinhood though, his next major trade was made right after Liberation Day. He threw just about $1,900 on 1 DTE SPY calls, and we all know the market recovered pretty quickly during that time, so he was actually up 325% later that day. A few hours after that, and his originally $1,900 position grew all the way to 11k. He says that he was down $1,400 at one point early in the day, and that this gain was how much he'd be able to save with 6 months of working his job. He realized he was a trading genius now, so he decided to get even more risky SPY options only a week later. This time though, he was feeling like a bear instead of a bull and got puts that expired in a week and a half. After 4 days of holding, SPY was down 3% and his puts were up $2,000. And later that day, his contracts were worth just about $9,700. A month later, he posted one last screenshot of his gains year to date, even though he hit his account value. But after that, he stopped posting to Wall Street Bets and focused in on his genius parlays. He hops back onto Robinhood moving into 2026 and felt like Netflix would make him rich. By January 21st, he had $3,500 on the line, which may not sound like a lot, but he said rent is due in 10 days, and that he might get evicted or need a loan. It doesn't seem like he's joking either, because it only gets worse as you read through the comments. He says, Rent is due in 10 days. I have 1K in the bank and I pay 3K a month. I technically barely have a month to pay off this month, but next month will be brutal. He also says that he lives in New York, has a wife and daughter, and that his wife actually encouraged him to double down earlier that day. A lot of people commented saying that this was a bit too reckless, even for Wall Street Bet standards, but according to him, life with no risk is not a life worth living. Netflix is down another 2.5% since his last post, so hopefully things are alright for him and his family. Proper Bag 1875 is a user who has a magical trading genie. His first post was made on October 10th of 2025. He saw the market spike up 10 minutes into the trading day, and according to him, his brain literally, for no reason, told him to buy puts. That being said, he bought $1,400 worth of puts that were just about $2 out of the money. All of a sudden, news came out about new tariffs on China. SPY fell almost 2% over the next 3 hours, but Proper Bag didn't even know. He says he was busy doing who knows what, but when he came back, he couldn't believe his eyes. His $1,400 position skyrocketed all the way up to $49,000. Adding to the craziness, he says that this was the first time he ever bought puts his whole life, and that he rarely buys options in general. About a week later, he forgot about the SPY options and got ready to get risky with Fubo. He picked up about $34,000 in shares and was already looking at a $4,300 gain just a few days later. They had earnings coming out 2 weeks later, and Few Needleworker 4391 said, "See you on the moon or in bankruptcy court." If Proper Bag held, it seems like the latter would be the answer, but we never got an update from him on that trade, so we don't really know. We did get an update on another crazy SPY trade a couple months later though, where he got his hands on a 500% gain.
When things are getting crazy, hedging your bets can be a wise move. And taking advantage of sign-up bonuses can be a great way to, no joke, make a few extra $1,000, which I'll get into in a second. With platforms like Kalshi, you can trade on real-world events and can unironically use the platform to hedge positions you have in your stock portfolio. Kalshi is the first legal platform in the US where people can trade on events in all 50 states. You can trade on things like whether or not Bitcoin will outperform gold this year, what the Fed's decision is going to be in March, or on who's going to win the Super Bowl tonight. Kalshi gives you an interactive chart that lets you see how the odds of a given event have changed over time, which is honestly kind of just cool to see even if you're not going to place a trade on it. And if you weren't already aware, even Robinhood has partnered with Kalshi. Any cash or positions you hold on the platform will earn an additional variable APY. Signing up with the link down below in the description will get you a free $10 credit after placing your first trade, so why not sign up to see what you can do with your bonus. Here's a trade I placed on Kalshi, and the thing is, I was actually guaranteed to profit. Not because the Dodgers winning was a lock, but instead because I was converting a sign-up bonus from BetUS, which is just a sportsbook and not an exchange. I actually went on a week-long rampage where I opened up 5 different sportsbooks and made over 7K in profit from sign-up bonuses and arbitrage. That being said though, it's not something that is too repeatable because you do get limited pretty quickly. And honestly, I live in Illinois, which for some reason has some pretty hefty sign-up bonuses. But if you want help temporarily making pretty easy money by taking advantage of sign-up bonuses, you can email me or message me on Discord for more help. I did a similar thing with Mumu in the last video, and some of you guys said it sounded too good to be true, but I paid you guys out.
Matt Scott 134 is a user who loves yellowing his money on options before earnings plays. His first post was made back on April 24th of 2023. He was feeling very bullish on First Republic Bank and loaded up on $8,600 of calls that expired in just over a week. Things were off to a good start, and he was already up 65% in just 2 days. But little did he know, this would be the last day anyone would be bullish on FRC. Matt Scott never gave us any updates on his earnings play, but I honestly don't really think we need one. Matt Scott was down in the dumps after that and took a 9-month-long break from posting, but came back on January 26th of 2024 with yet another risky earnings play. This time, he had 15.2K thrown into shares and another 15.5 into short-dated calls. This was nearly 80% of his portfolio on the line, and SoFi was going to report earnings the very next morning. SoFi actually did insanely well and not only rose 15% by market open, but 23% at its peak in the middle of the day. Matt Scott more than doubled his money, and only 5 days later, he made a trade that was pretty much just as risky. He threw just under $21,000 into QQQ puts that expired the next day with different strike prices. The market was already down about 2% for the day, but Matt said, "Sell-off will continue into tomorrow. Otherwise, you can find me at Wendy's." Already down $3,700 by the end of the day, one user commented, Your entries were so bad that you're somehow down 20% on puts on a negative 2% day. That's special. The next day was a good one for the market, but a bad one for Matt, as you could probably tell from his comment. That was 20K straight down the drain, and he actually stopped posting after that, until he came back 3 months later and threw 58K on Chewy calls. He was already down 11.4K, but according to him, everyone loves their pet. He says that he also had an additional $12,000 sitting in shares, but ends off the post by saying, "This is full port," which is definitely pretty concerning. And believe it or not, his $58,000 position would have been worth 308K by expiration if he held. He never posted an actual screenshot of him locking in profits, so he might have sold along the way though. A month after that, he had 11K worth of Nvidia puts betting on a bad earnings report, which was not the right move. 2 months after that, he threw 20K on a bunch of different PayPal debit spreads and said, "I was gonna sit this one out because I've gotten burned on their past 4 earnings. But then I thought, wait a minute, I need to inverse myself." And good thing he did, because he actually found himself $21,000 in the green and sold his positions that were in the money. A month after that, he posted another bullish trade on SoFi. 3 months after that, he threw $20,000 into PAA leaps that haven't really budged over the past year. And a month after that, he threw $29,000 into Pfizer calls because he said the stock was extremely undervalued. And only 3 days later, he was actually up quite a bit, selling some of his calls that were closer to expiration and letting the others ride out. 2 months after that, he threw 13.5K into Celsius calls that initially looked like they were going to expire worthless, until the stock jumped 28% in a day because of news about a deal with Alani. This leads us to 2026, where Matt really took it up a notch. He threw just under 53K into more PAA calls. The stock is up 8% and his calls are now worth 121K, except he doesn't own them anymore. He sold them for break even to buy 54K worth of Beyond calls instead. He said his last trade was too boring, but he feels the momentum shifting with Beyond, and that was all the due diligence he had. That trade lost him just about $10,000, which made him feel super squirrely and YOLO everything into 0DTE, Intel, and Oracle calls that actually brought him all the way up to past 70K. He threw it all into Lululemon calls later that day, but decided not to hold all that long. This takes us to January 21st, which is the most degen day of his trading journey by far. Matt started off the day with a $71,000 portfolio. He may have been a bit too bullish for his own good though, and kept averaging down on 0DTE SPY calls throughout the day, which put his account in the red by more than $30,000 with just an hour left in the trading day. But then SPY jumped 1.3% and Matt's account went from a low of 30K to now $307,000. "I'm gonna throw up," he says. But he decided to do it all again the very next day. He was feeling bearish this time, so he bought $30,000 worth of puts instead of calls. And SPY ended up trading pretty sideways that day, but he still was somehow able to make a $46,500 profit. His portfolio was now worth about $430,000, and instead of quitting while he was ahead and walking away from options for good, he decided to make another big options trade just a week later. He threw $60,000 into AT&T calls with various expiration dates. The stock was down 5% over the past year, but they had earnings coming out that Wednesday, and somehow Matt made yet another correct prediction. The stock rose 14% over the next 3 days, and his calls were up $86,000. That was Matt's last post for now, but let's see if he's able to keep the crazy run up. SarahBrew4 is a user whose portfolio is barely hanging in there. His first post was made back on January 31st in 2025, and he figured he might as well start it off with a bang. He threw just under $12,000 into 0DTE Tesla puts. The stock rose just about 1% in an hour, and he decided that he had enough. There went $7,000, and he said, "0DTE, never again." The stock actually fell 3.5% throughout the day after he sold, but that's neither here nor there. He kept on trading, but didn't really make any posts until he finally came back 2 months later in May. For some reason, he was feeling bearish on Tesla again, so he decided it was time for round 2 with the infamous 0DTE Tesla puts. He started off the day by throwing $22,000 on the line, which took up most of the money he had on Robinhood. Things were not going all that great though, and an hour into the trading day, Tesla was up almost another percent since market open. Another hour went by and Tesla did not look like it wanted to quit. He was down $15,000, but instead of quitting, he decided to hop on over to another brokerage and didn't double down, but quadruple down. He now had a grand total of $85,000 riding on Tesla's downfall that day. Tesla ended up closing 2% in the green that day, and he sold his puts for a $63,000 loss. Even worse than that is the fact that he was now only up $40 for the year, so this loss completely wiped out his gains. Involuntary Soul said, "Try buy low, sell high next time." That's exactly what he would not do though. He threw just under $40,000 into SLV calls, and SLV fell just over 1%, which isn't much, but was enough to scare him into panic selling.
Patrick! No! Patrick! No! Why did you put it?
He sold for a $13,000 loss, but if he held for just one more day, his calls would have been worth about $100,000 instead. He said, "I was gambling my new car money, and it looks like I'll have to wait another year to buy." After getting burned by silver, he figured that he had to get revenge. So on January 29th, he bought $25,000 worth of 4 DTE calls. With $4,000 of buying power left, and silver's D-Day coming up literally the next day, he was about to be in for a rude awakening. But luckily, he sold right before the rug got pulled and locked in a modest $3,500 gain. Helicopter Pocket is a user who's on the brink of losing it all. His first post was made on September 5th in 2025. He was, for some reason, feeling extremely bearish that day, so he threw just over $2,000 into puts on the S&P 500. The index quickly fell about 0.5%, and Helicopter Pocket was able to sell his puts for a 500% gain. B Pilot said, "Okay, sorry, you suck at this," for some reason. A month and a half later, he was feeling riskier than ever, but felt bullish this time instead of bearish. He threw 42.7K, which was his whole portfolio, into 3 DTE SPY calls that were at the money. A few hours of holding and SPY was moving pretty sideways, so he was already looking at a $3,500 loss. SPY closed down very slightly, just like 0.1%, but his calls were burning money every second SPY wasn't rallying since they were so close to expiration. Luckily though, SPY opened in the green just over 1% the next day, and he was able to sell for a $23,000 profit. Good thing he did too, cause it would have been a $19,000 loss if he held instead. He posted a picture of his car 2 weeks later, and 3 weeks after that, he posted a screenshot of his SPY calls that he bought that day. Things were off to an atrocious start, and he said, "I was just trying to scalp for a quick gain and got distracted." I'm not sure how he got so distracted to the point that he lost 37K, but he said he was going to hold until at least the end of the day tomorrow, hoping for a small recovery. He didn't give us another screenshot, but he did say that he lost another $14,000 on these calls and sold for 5K. He got reamed on this play, but things would be different next time. Jumping 2 months ahead to January 22nd, he threw 32.5K, which I'm assuming was most of his portfolio, into Robinhood calls. That turned out to be a terrible time to buy calls on the stock though, because it already fell 9% just a week later. His calls were down $19,000, and Helicopter Pocket said, "Hood is gonna make me move to the hood." Since that post, Robinhood is down another 7%, so he better hope for a last-second miracle. Loss Finding 7891 is a user who has been getting the short end of the stick on Robinhood. His first post was made on June 27th of 2025, and he started off hot by throwing 19.7K on 0 DTE MicroStrategy calls. The stock traded sideways for the first 3 hours of the day, but then it just fell 2.5% by market close, which was $12 short of his strike price. Loss Finding sold a little bit before that, but pretty much still lost it all. Ryanopoulos said, "Put down the crayons, pick up your phone, and delete your trading app." A month after that, he was back at it again and feeling very bullish on RTX. So much so that he threw $6,400 on 3 DTE calls. A day of holding went by, the stock was down about 1%, and his calls were down a whopping $3,000. RTX went on a pretty strong rally in the months after that trade, but not within the 3-day window that he held his calls, so that would be another $6,000 loss if he held. The very next day, Loss Finding showed off even more options contracts that he was holding that were also in the red. His $25,700 worth of Lululemon calls were already down $4,400 in the first 7 days of holding, and even better than that, it needed to jump 7.5% in the next 8 days for him to simply break even. His reasoning was that the stock was super oversold and was pretty likely to bounce at least a little bit before their earnings report came out next month. A good amount of users said that this was actually a fairly reasonable trade, but the stock fell another 2.5% by the time he posted the next day. He doubled down and threw an additional $16,000 into calls and was now down just under $21,000. So things ramped up pretty darn quickly. Sentiment changed pretty quickly, and now everyone was just laughing at him. Ride to 0 or 200 next week? He asked. The stock did have a slight recovery, but never even touched his strike price. Loss Finding did not post a single winning trade yet, but on October 9th, he got ready to turn things around. He threw $4,800 into Kratos calls because the stock fell 10% that day and he figured it could rebound. His calls had 2 weeks till they expired, but when the stock opened in the red by 2.5% the following morning, he decided to throw another $900 on the line. He was sitting on a $3,900 loss so far, but the stock unexpectedly jumped 6% over the next 15 minutes, and he was able to sell for a 120% gain. Loss Finding finally escaped from the dark side of the moon, but didn't make his next major trade until January 8th. He threw $13,000 into Oklo calls that morning, and the stock actually rose 3% in just 14 minutes, so he quickly sold for a 70% gain. Loss Finding was glad he profited, but honestly felt a little bit gypped because news came out about a meta deal pre-market the next day. The stock was up 14% at market open, and even though he locked in a gain, people were clowning him saying, "Sell low, buy high." Loss Finding wanted to make sure he was the one who got the last laugh though, so he threw $9,300 into 0DTE calls early on in the day. The stock fell 13% that day, but luckily, he sold his calls within 10 minutes for a $4,500 gain. Then later that day, he made an even riskier trade and threw $33.6K into Alibaba calls that were 7% out of the money. He ended off the day up just over $1,000, and Top Subject 38 said, "What do you know that we don't?" Turns out he might have known something because the stock was up nearly 8% by market open on Monday. We don't know exactly when he sold, but his $33,000 position peaked all the way up at $150K for the day and even higher at $180K 10 days later. 2 days later, Loss Finding wanted to keep his hot streak going, so he threw $50,000 flat into Figma calls. Near IPO price, trying to catch a bounce. No due diligence. Pretty much everyone commented saying that this was just not a smart play, but Loss Finding didn't care. 3 days later though, the stock was down just about 10% and his calls were down 12.7K. He wanted to know if he should cut his losses, and someone said, "I mean, that all depends if it's gonna go back up or down. If up, don't sell it. If it's gonna keep going down, then absolutely sell it. It would only be smart." I hope this helps. Loss Finding didn't follow these instructions though and lost another 10K as the stock went down over the next day and a half. He threw another 5K on the line, but still didn't know if he should hold till 0 or not. Thanks for watching. Make sure to like, subscribe, and check out the video on screen for more crazy trades.